Hey everyone, it's at 13 and welcome back to the channel. Today we're diving into a topic that hits close to home for all of us taxes. Specifically, we're uncovering the hidden tax secrets that could save you thousands. All based on the book What Your CPA Isn't Telling You, Life-Changing Tax Strategies by Mark J. Kohler. Let's be honest, nobody enjoys thinking about taxes and most of us just hand our paperwork over to a CPA and hope for the best. But here's the thing, CPAs, while incredibly helpful, are often limited to working within the confines of the tax code. You've made financial decisions. If you're tired of overpaying on taxes and want to learn how to keep more of your hard-earned money, this video is for you. So, grab a pen and paper and let's get started. Let's face it, most people overpay on their taxes, and it's not because they're trying to. It's often because they're stuck in a reactive cycle. They work hard all year, make financial decisions based on their immediate needs and wants, and then come tax season, they scramble to find deductions and hope to minimize the damage. Think about it. How many times have you made a big purchase only to realize later that it didn't give you the tax advantages you thought it would? This reactive approach puts you at a disadvantage from the start. But what if you could flip the script? What if instead of reacting to the tax code, you could leverage it to your advantage? That's where proactive tax planning comes in. Imagine knowing exactly what deductions you qualify for making a purchase or investment. Imagine structuring your income and expenses in a way that minimizes your tax liability from the get-go. This is the power of being proactive with your taxes. The key is to understand the fundamentals and then work with a qualified financial advisor who can help you implement them effectively. Remember, knowledge is power, and knowing even a little bit about tax strategies can put you miles ahead of the curve. Let's dive deeper into the difference between reactive and proactive tax strategies. Imagine you're playing a game of chess. A reactive player only reacts to their opponent's moves, constantly on the defensive. That's what most people do with their taxes. They wait until tax season, see what they owe, and then try to find deductions to reduce their bill. They're always one step behind. Now, imagine a proactive chess player. They think several moves ahead, anticipating their opponent's strategy and planning their own moves accordingly. They're in control, dictating the flow of the game. That's what proactive tax planning is all about. It's about thinking ahead, strategizing, and making financial decisions that minimize your tax liability in the long run. Instead of simply reacting to the tax code, you're using it to your advantage. This might involve things like adjusting your W-4 withholdings. Many people over-withhold on their paychecks, giving the government an interest-free loan, asterisk, maximizing retirement contributions. Contributing to retirement accounts like 401(k)s and IRAs not only helps secure your future, but also offers immediate tax benefits by reducing your taxable income. Strategically timing income and expenses. If you have some control over when you receive income or pay expenses, you can potentially shift them into different tax years to minimize your overall tax burden. Now let's talk about one of the most powerful tools for reducing your tax burden: business ownership. I know what you're thinking. Graham, I'm not a business owner, I'm not selling anything. But here's the thing, you don't have to be a traditional entrepreneur to reap the tax benefits of business ownership. In today's economy, more and more people are turning to side hustles, freelancing, and online businesses. Even if you're just driving for Uber a few hours a week or selling handmade goods on Etsy, you could qualify for significant tax deductions. The beauty of business ownership, even on a small scale, is that it opens up a whole new world of potential deductions. Suddenly, expenses you were already incurring, like your home office, internet, and even your car, can become tax write-offs. Business ownership also allows you to take advantage of various tax credits, which directly reduce your tax bill dollar for dollar. Whether you choose a sole proprietorship, partnership, LLC, or S-corp, understanding the tax implications of each structure is crucial for maximizing your savings. Chapter 4. The best tax deductions most people overlook. Now let's get practical and talk about some of the most commonly overlooked tax deductions that could put money back in your pocket. These are deductions that many people simply aren't aware of, and they can make a significant difference come tax time. First up, the home office deduction. If you're self-employed or work from home, even part-time, you could be eligible to deduct a portion of your rent or mortgage interest, property taxes, utilities, and even home insurance. This is a huge one that many people miss out on simply because they don't think they qualify. Next, let's talk about travel and vehicle expenses. If you travel for work or use your vehicle for business purposes, you can deduct a portion of those expenses. This includes things like mileage, gas, tolls, parking, and even depreciation on your car. Another often overlooked deduction is for medical expenses. While there is a threshold you need to meet based on your adjusted gross income, if your medical expenses exceed that threshold, you can deduct them. And let's not forget about retirement account contributions. Contributing to a traditional IRA or 401k not only helps you save for retirement, but also reduces your taxable income in the present. Chapter 5. Using real estate to reduce taxes. Now let's talk about everyone's favorite asset class, real estate. But we're not just talking about buying your dream home, we're talking about using real estate as a powerful tool to reduce your tax liability. One of the biggest tax advantages of real estate investing is depreciation. Even though real estate generally appreciates in value over time, the IRS allows you to depreciate the cost of your rental property over 27.5 years. This means you can deduct a portion of the property's value each year, even if it's generating positive cash flow. Then, there's the 1031 exchange, a powerful tool that allows you to defer capital gains taxes when you sell one investment property and reinvest the proceeds into another. And let's not forget about the potential to generate passive income through rental properties. If you're looking for a way to build long-term wealth and reduce your tax burden, real estate can be an incredibly powerful tool. Chapter 6. The importance of estate and asset protection planning. Now let's talk about a topic that's not always the most pleasant to think about but is crucial for protecting your hard-earned wealth. Estate and asset protection planning. Imagine spending years building your wealth, only to have a significant portion of it eaten away by estate taxes or lost in a lawsuit. That's where estate and asset protection planning comes in. Estate planning is all about ensuring that your assets are distributed according to your wishes after you're gone. This involves creating a will, designating beneficiaries for your accounts, and potentially setting up trusts to manage your assets for your loved ones. Asset protection, on the other hand, is about shielding your wealth from potential creditors, lawsuits, and even excessive taxation. This might involve setting up trusts, LLCs, or other legal structures to protect your assets. Even a small business owner or someone with a modest real estate portfolio could be vulnerable to lawsuits or creditor claims. The key is to be proactive. Talk to an estate planning attorney and explore your options. Outro. Start saving today. That wraps up our deep dive into the hidden tax secrets your CPA might not be telling you. Remember, taking control of your finances and minimizing your tax liability is about being proactive, understanding your options, and making strategic decisions throughout the year. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit the notification bell for more financial tips and strategies. And don't forget to check out Mark J. Kohler's book, What Your CPA Isn't Telling You: Life-Changing Tax Strategies, for even more in-depth tax-saving strategies. The link is in the description below.